The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And I will tell you, if you're in the thick of it, this is where you're going to get all your questions answered. I'm joined in studio with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. All right, so on top of everything, the House passed a new stimulus bill yesterday. And before I get to the phone calls, 8030930, 8030930, star 930 on the cell phone, I want you to know this is the highlights. And if these are the highlights, then there's stuff in there that will blow your mind later when we get to the lowlights. But in this new package, everybody gets $1,400 when you have, if you're single with $75,000, phases out at $100, married filing a joint return, up to $150, phases out at $200,000. Everybody's going to get $1,400. It looks like it caps out at $5,600 per family. Now this is what I got from CNN. There's also going to be pandemic unemployment that's ending this March. That's going to be lengthened until August the 31st, and it's going to be moved to another $100 increase per week up to $400. Then, and this is the stuff that blows my mind, there's going to be a new child tax credit proposed. Right now it's $2,000 for your kids under the age of 17. This would be $3,600 for children up to age 6. Then for children 6 and over, it's $3,000. Then they're going to triple the earned income credit. Now the earned income credit is maximum's about $7,000. So if you triple it, does that mean $21,000?
7. Wait, let me do the new math.
Right.
Yep.
So they're going to triple, but with this new thing, it ends at 19. Okay, and so let's just say that you're a working parent making $15,000 with 3 kids under the age of 6. Under this proposal, the child tax credit would be $3,600 times 3 kids, or $10,800, and the earned income credit would be over $19,000. That's without the state. So the parent would get a refund over $29,800
For making $15,000.
I just thought people should know that, because I don't know who's footing the bill, but it is unbelievable.
You know, I know we don't like to get political here for this hour of the show, but why do they want people to stay at home and not work? You know, take this money, put it back in these businesses that need it to open their doors, to bring back the employees. You know, stop laying off jobs, stop shutting down companies. We need jobs back in America. We weren't built. This country wasn't built on sitting on your butt and doing nothing. It was built on hard work. You want a nice house, you work for your house. Stop getting rewarded for doing nothing. I hate to say that.
Well, I mean, I just don't know where the money's coming from.
Yeah.
I just don't know where it's coming from. And then the last part is they're going to expand health insurance so that if you pay more than 8.5% of your health insurance payroll deducted, you can go to the marketplace and they'll give you a subsidy. So that's just some of that. I just thought I'd give it to you here straight. 8030930, 8030930, star 930 on a cell phone. And we're going to go to Ed, who's been waiting a long time. Hi, Ed. How can we help you?
Yeah, hi, Esther. I have a question about this situation. What if you received some underreported bank interest on Form 1099 INT for entry on Schedule B? What's the best thing to do? Just enter that amount, perhaps on one entry on the Schedule B, and then another line saying that you never got a 1099 INT for that amount. Let's say the amount was $500 difference.
Okay, so did you get a 1099 INT, a 1099 DIV, or a 1099B?
1099 INT.
Okay, so that's interest. So you have to report that on your Schedule B.
Right.
So
And that amount, I think, was under. It wasn't. I think it was not the correct amount. It should have been $500 more.
okay, well, you can always claim more income on your Schedule B under interest, but you need to, you should contact the person that gave you the 1099 and say, I believe this is incorrect, so they can go back and issue a corrected one, but you can always claim more than what was reported to you.
Absolutely. I mean, they never will send you back your tax return and say, oh, by the way, you put more income down than was reported to us. So really, it's if you list the correct amount of money, that's all you need to do. Right. So, I mean, that's the bottom line is if you certainly don't write, you're obviously going to do a paper return because you don't write notes to the IRS. They don't read it. So, okay, just wanted to, okay, we good?
Right, so I just
Yes.
Make an entry of the amount actually received and then another entry for the 500.
You can do it that way. You could list, if it was M&T Bank, you could just list M&T and add the 500 to their figure. So it's however you want to do it. You could break it up into two, or you could add the two figures together.
Thanks a lot. I don't want to cheat Uncle Sam.
Okay, thank you. Have a good weekend. Enjoy the sunshine.
You too.
All right. We're going to go back to the phones. Hey, it's Tom from Clarence. Hi, Tom. I'm Esther Gilius. How can I help you?
Hi, I have a two-part question. My brother and I jointly owned a home that we inherited in December of 2018, and we sold it last June. So although my brother lived there, he did not qualify for the waiver because he hadn't lived there 2 years as owner.
Well, no, it's not 2 years as owner. It's just he had to live there 2 out of the last 5 years. So if he was living with mom or dad, whoever passed away, he would get the exemption and he wouldn't have to pay tax. And if it's an inheritance, you get the stepped-up basis anyways.
Okay.
So
now we knew about the stepped-up basis. At any rate, so he might be in the clear.
Yep.
The problem is, one of the problems is, the 1099-S was sent in my brother's name only for the full amount. Yet we are co-owners. So do I need to ask the lawyer to reissue two 1099-S's or put both our names on it? And
I mean, if the lawyer will reissue, that's great. Otherwise, you can just do the math correctly, do the sale, and for your part, you just would increase you basically fudged your part because you're going to give the other half to your brother. But if it was a 50-50 sale, he should have listed it in two different 1099-S's.
Yeah, I just realized this yesterday, so it was too close to call, or too late to call the lawyer.
No, it's not too late. It's never too late.
No.
You call the lawyer and say, gee, you knew it was me and my brother. You need to do two 1099-S's.
Yes, I will do that.
All right, good enough, Tom. Thanks for calling. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. We're going to take a short break and be back on the other side. Hey, your family to me. I'm the tax lady. I'm Esther Gilius, the tax lady from EG Tax. Joined in studio with Chris Fabian, and we're talking taxes. Chris, let's look at the board here. What do we got here for streaming?
sure. For the first text is, hi Esther, if you're eligible to claim your 19-year-old college student as a dependent, does that mean that student cannot file independently and they lose the stimulus recovery rebate?
That's exactly right.
Yep.
So that's why it makes it, because of those recovery rebates, because of the stimulus money, parents in the past that have always claimed their college age kids, and we always would have told you before, make sure you claim, because the AOTC, this year you want to rethink it, because if the kid even though he's eligible to be claimed by you, if they have some income and they want to file their own return, they would get the 6, the 12, and just like I said, last night the House passed the $1,400 stimulus. Obviously, there comes a place where you do the math. Sometimes it's better for the parent to claim the child, but many times it's better for the kid that's been working to claim themselves because they got all this stimulus money. So that's absolutely correct. You end up doing the tax return, mom and dad claiming the kid claiming themselves, and you have to look at the comparison and see which works better.
It's like one of those peg puzzles that one peg is missing and you have to slide around to get the whole picture.
Yep.
That's what you're doing with these tax returns. You're sliding each peg and seeing which one fits better. So it's a lot of work this year, especially when you throw unemployment in there with your college students.
Oh my gosh, because on top of everything else, if your kid got unemployment, you are doing your own return, you may find out that they're talking about kiddie tax, and that means that the kid has to pay taxes at the parent's top rate. And that's another conundrum. So when you're doing the computation, if mom and dad claim the kid, then the kid has to pay kiddie tax on the unemployment when they do their own return. Yeah. And so it makes it very difficult.
Yeah.
I'm Esther Gulias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Another comment was Communist Chinese plan to bankrupt USA. I don't get it. I've done taxes since the beginning of time. Methuselah and I are like running close neck and neck. I just can't believe that they would think that somebody should get $30,000 for not really working a full-time job.
Yeah, I've told people we're either going to become the United States of China or the People's Republic of America.
I'll tell you, it's unbelievable.
Yep.
Okay, can we explain what a 1099-R is? A 1099-R is the form that your annuity, pension, IRA, people that are handling those annuities, pensions, IRAs, send you to report to the IRS how much money you got in those type benefits, and that's what a 1099-R is. Remember, a lot of people aren't aware of it, but once you hit age 59 and a half and you're a New York State resident, filing a New York State return, the first $20,000 that each you and your spouse get in 1099 income is tax-free. And of course, if you have a New York State or civil or county 1099-R, the entire thing is tax-free. So if you've been taxing yourself on those pensions, the first $20,000, if it's a non-New York State county or federal pension, then the first $20,000 is tax-free. If it is one of those other ones, then the entire thing's tax-free, no matter what your age is. So that's really important.
On the state level.
On the state level. Thank you, Chris. Good. What else we got here?
Hi, Esther and crew. Can you provide the time frame when stimulus will be deposited? I heard mid-April at earliest. Who is going to pay back money to reduce the federal deficit? Remains a personal mystery. Thanks, Mark.
A perennial mystery.
Oh, perennial.
So I heard that Biden wants it on his desk by the 15th of March. I would assume that just like all the other stimulus money, they get it out fast as they can. But that's why anybody that hasn't filed that needs to do direct deposit, you want to get your tax return done so that that next round of stimulus you can get. By the way, and in this this bill that they passed at the House last night, there's also expanded subsidies for small businesses, and they're going to bail out the states as well. So just you can go online and read it under CNN. It's there. And then in here, 2020, my uncle passed and I received the stimulus of $1,200. At that time, the IRS said the amount needed to be returned, which is what my aunt did. Now a parent.
You have to.
Oh,
slide
okay.
up.
I got to go up there. Apparently, that has changed, and the amount can be kept by my aunt anyway. Can she claim the money back? No, that's not true. If the second stimulus, which was in January, is $600 and she got $12, she's supposed to return the $6.
Right. If you were if the person was passed away before the stimulus was issued, you have to return it.
Right.
So
All right. I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Larry. Hi, Larry. How can we help you, sir?
Hi. I received a interest on my return for last year.
from the IRS?
Taxable federally, but is it taxable for the state?
Not if it's from the Department of Treasury, which it is. So if your refund was being held up and they gave you a little bit of extra interest on your refund when they sent you the money, they're going to send you a 1099, and that is from the Treasury Department, so you back it off on the state return.
Hey, that's great. And they pay great interest, too.
They sure do, don't they? They seem to pay great everything lately.
Okay, let me try one more thing.
Yeah, Larry.
When I filed my return last year, I wanted to apply like $5,000 of the return to this year's taxes.
Okay.
Okay? They didn't do that. They sent me the entire return.
Okay. Well, then they didn't apply it.
Pardon me?
Well, then they didn't apply it.
No, right. So the question is, I made a quarterly payment in April and another quarterly payment in June, which is insufficient because they returned that money. So am I obliged to go through and figure out if...
Well, see, the thing is, Larry, why didn't you make a September and January payment if you had gotten that money back?
I did, but...
Wait, no. You just said April and June.
Right, April and June.
And September and January?
Yes.
All right, so you have your entire estimate pre-done, like you're supposed to do, right?
Right, but I didn't really pay enough.
How short are you?
Pardon me?
How short are you?
I really don't know. I didn't even try to figure it out.
All right, so let's just say that you've paid in the same amount this year as you had last year's liability. Then there's a 2210 you do, and you can avoid the taxes on that. So there's another way. There's a way to get off of the penalty if you paid in at least the amount equal to last year's liability.
Well, of course. Okay.
Okay. Hey, thanks, Larry. Thanks for calling. I'm Esther Gillius, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. If you're somebody that likes to do your tax return by paper, please don't. And that's not because I want you to come see us go anywhere. Just go. I mean, the thing is, they're not processing. And those of you that had sent checks and they haven't cashed them, you know that they're not processing things that are done in the mail, that are just mailed in. And you're just really causing yourself a big problem with all this stimulus money coming down and all this other stuff coming down. Do your tax return electronically. Do it with a direct deposit because it's the best thing to do. It's not like a lot of people say to me, oh, I don't want them in my bank account. Hey, believe me,
but they'll
they
let them
know
in
your
if
bank
there's a
account
deposit.
number. Pardon me?
I said they'll let them in if there's a deposit. They just won't let them in if there's a withdrawal.
Well, no, I just had a lady today that said I really want my the check mailed. You know, I mean, I know when you are used to getting checks that's what you probably like, but I'm going to tell you now, nowadays the best way to do it is for many reasons, because nobody really looks at the return except for the electronic the machine, and it doesn't look at all those notes you think you're putting on. It's just strictly simplicity, and it just is the fastest way to file.
Right.
So anyway, all of our offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. Our McKinley Mall office is open tomorrow.
11
Sunday,
to 5.
11 to 5. You can call our staff, ask them questions. You can email us through our website at egtax.com. Ask the tax lady, and we certainly want to help you. So let's see. Slow down, Esther. Let the poor guy finish his question. I'm sorry.
Always. And then think this stimulus puts federal deficit over $29 trillion. That's 29 times 1 million sets of 1 million.
Yeah. It's unbelievable.
Yeah.
I mean, it's just so sad because I don't know what the goal is. If you feel like there's a goal here, like I don't know, it just doesn't make any sense to me.
You know, but what's funny is you get people in that were like, "Oh my God, I didn't really need anything," you know. Da, da, da.
Well,
but
how many tax returns have you done where people made less money than last year? Not too many.
Not too many.
Most everybody's made a lot more than
Yep.
than in 2019. Okay, let's go back to the phones. We'll talk to Jim. Hi, Jim. How can we help you, sir?
Hi, guys. Thanks for your show. I really appreciate it.
Thank you.
The question is based on something you said earlier. I have two 19-year-olds that are full-time college students, and they worked a little bit. They both had W-2s. So I'm thinking, do you have any guidelines on what?
Well, how much did they make?
Maybe $2,000.
Okay. Do either of them have unemployment?
No.
Do they have? All right. How much is your income?
Our income is filing jointly about $135.
So they would get the
they're
AOTC.
good. All right. So if your income was high so that you didn't get the American Opportunity Tax Credit. Oh, I got it. Jim, can you hang on? I got a break for news.
We'll get you on the other side.
We'll get you on the other side. Hey, everybody, to us, your family. I'm Esther Golias, the tax lady from EG Tax. And we hope when you're thinking taxes, you'll think about EG Tax because we certainly want to do a great job for you. And in the meantime, if you have questions, you can go to our website at egtax.com. Go ask the tax lady, and I will be very happy to help you with your questions. But I'm going to, in the meantime, go back to my friend Jim, who's been holding. All right, Jim. So here's the thing: if your income was so high that you didn't qualify for the American Opportunity Tax Credit, all right, that would be somebody that would definitely look at letting the kids claim themselves, because all you get per kid is how much, Chris? If you don't get
$500.
$500. That's it. So if that were the case, then but you take a look at your kid who's going to get $600, $1,200, and $1,400. That's a lot more than $500. But if you are getting the American Opportunity Tax Credit, then the next thing you got to say is, are my kids on full scholarship? Because if they're on full scholarship and you're not getting anything on AOTC again, then you got to also look at, well, maybe the kids should file their own, because with me claiming them, all I get is $500, and I'm really not getting any American Opportunity Tax Credit. So, and it's not because of income; it's because they're on scholarship. Then the third reason would be if the kid got lots of unemployment, because then the kid has to pay at your rate, and your real rate is 22%. So if the kid got $10,000 in unemployment, he's got to pay almost $5,500. I mean, almost $2,200 in taxes. And so if the parent claims them, that's the problem there. So that's the thought process.
Great. Okay, thanks.
All right, thanks, Jim.
I hope you followed that. But that's what we,
that's how we think.
And that, why would somebody try this on their own? Why, you can, but if you don't know.
Well, you just overpay. That's all.
You just overpay. And like you said before, the government's not going to say, oh, gee, Mr. Smith, you know what? We think this would have been better for you. Here's an extra $4,000.
Well, I'll tell you. And the other thing that they do is, if you messed up because you used you didn't do the kiddie tax for the kids, then that's a problem.
Yep.
Right?
Yep.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And you can text us at 716-8030930 as well. All right, so wanted to talk about what is taxable income. I think people are really surprised at some of the things that are taxable income. First of all, people don't know that when you barter, that's taxable income. So give me an example of bartering, Chris.
You're a dentist and you have a landscaper come to your house and you say, hey, he says, oh, guess what? I can do your landscape and it's going to be about $15,000. And then you say, oh, okay, well, your teeth look pretty bad. I can do a couple implants, and I won't charge you. You don't charge me. I won't charge you, and we'll call it even.
But that's taxable income.
That's taxable income.
In other words, that fair market value of the service that you were given has to be claimed as income.
Right.
Right. Debt cancellation. Now, debt cancellation, when you see these things on TV that says, oh, we can get you to take pennies on a dollar, and that may be true, but when they cancel a debt, that debt cancellation potentially is taxable unless it's your personal residence, there's a bankruptcy, or
you're insolvent.
You're insolvent, which means that at the time that the debt was forgiven, you had more liabilities than you had assets. So you actually have to do kind of an accounting spreadsheet to see if you were insolvent. If you are insolvent, then you can do a form.
A 982.
982, and put on there that we're basically not going to claim the debt cancellation because we were insolvent at that time.
Right. And it's not at the time now that you received the 1099s. It's at the time that you settled the debt.
Right.
Or like what's that one? Freedom. I can't think what the name of. But there's a company out there. I know I have 5 people so far this year that are so upset with them because it's been like 6 years when they signed up for them, and now they're getting the 1099s. Right. And they're like, how am I supposed to remember how much debt I was in that many years ago?
Right.
And it's like, you just, the best you can come up with how much you owed Discover, how much you owed Amex.
Yeah, and so if you're looking at your balance sheet and you say to yourself, well, I had a house that's paid for, I have annuities, and I had $25,000 in charge cards. Oh, well, if you can pay, then they're going to make you pay taxes on that.
Yep.
Right?
Yes.
The other thing is gambling winnings. Plain old gambling is really a problem because it's listed as other income, and the expense of gambling, your losses, are an itemized deduction. Many, many times, most of the time, there are more expenses. I mean, people can't itemize, so the expenses are not going to be offset, and you're going to end up paying taxes on gambling income, and you didn't plan on it.
Right. I know I've had some pretty happy seniors so far this year because they usually have gambling winnings, and with the casino or them not going to the casino, they don't have that extra income. So which means 2 things. First, their taxes went down because there's nothing to make their Social Security taxable. And second is some of these seniors caused their income to go so high, their Medicare's was way up there, and now it's going to start going down because they don't have that gambling winnings.
So are you saying they shouldn't go to the casino?
Well, it would be to their benefit not to tax-wise, but I understand when you're bored at home, especially, I couldn't imagine how my mom does this every day for a year now. She sees 2 people, her brother who lives 2 houses down and her sister, and that's it. And that's really hard. And so I understand being cabin fever and wanting to get out. But casino...
But it really can cost you.
It can cost you a lot of money. Yep.
All right. The other thing is inheriting annuities, IRAs, pensions, stocks, and real estate. If you inherit cash, plain old cash, it's tax-free. But if you inherit an annuity, an IRA, a pension, stocks, and real estate, then it is taxable in one form or another. The annuity and IRAs, if it's traditional, would be fully taxable. Your stocks and real estate get a stepped-up basis, so that's another thing to look at. All right, Chris, let's go to, we got another
text. It says, if a person has a pension, can they open up a spousal IRA for a non-working spouse? Is there an income limit for a working spouse? What percentage can be put into the spousal IRA? Is this hard to set up, or do you do this at your office?
First of all, we don't sell anything. Right? We don't do any. We tell you what to do, but we don't sell anything because we don't want you to. We do taxes. Okay, that's number one. Number 2, you must have earned income in order to put money into an IRA.
Right.
So, if you have a pension, if what you're living off of is a pension and you're trying to do a spousal IRA, you can't. Somebody has to have wages. If you have wages, then you can do a traditional IRA or a Roth IRA for yourself and your spouse as up to $7,000 if you're over the age of 50. When is it that it moves from 6 to 7?
50.
50.
Sorry.
If you're over the age of 50 or older, that's what I'm thinking of. So you can put up to $7,000 in if you're 50 or over, each one of you, but you'd have to have $14,000 in income. So if there's $10,000 in income, you could only do $10,000. So that's how the limitation works. Further, if you have a pension plan at work, if you're working, and you are highly compensated, then that comes down to something else as well, because there's a phase out as to what you can put into an IRA.
Right.
If you're highly compensated.
Yep. And they changed the law now. You can be 99 and still working and put money into an IRA.
Right. And I did this with a lot of my clients this week.
Yep, me too.
I'd say, okay, so here's your refund. No, you have a $500 balance due. How would you like to get a refund? Yeah, we'd like to get. And you have income in the bank. I can see all your bank statements. So all you have to do is move the money from this shelf on the bank to this shelf on the bank, same asset, your same asset value, and you get to create a deduction. So that's a wonderful thing to do. Why don't we go to Mike, 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930. And I'm going to Mike. Hi, Mike.
Hello. I have a question about New York state tax. As next year, my wife and I will both be retired. She'll get a state pension as being a teacher and 2 Social Security. So none of that is taxable in New York State.
Correct.
But if we take out, let's say we take out $25,000 a year out of a 401k or 403b, the first $20,000, from what I understand, New York State is not taxable.
That's correct.
Do you also get the state standard deduction?
Yes.
So you can take $36,000 out and pay no New York State tax in.
Yes.
That's correct. I wasn't sure if you were allowed to do both.
Yep, you can. So your pension as a teacher is going to be tax-free completely.
Right.
Then your first $20,000 that you would get in a taxable item like an IRA or an annuity would be tax-free for you, and same thing with your wife. And then the standard deduction is applied.
Okay, good. So we can take $36,000 a year and not pay any state tax.
That's correct.
All right, thanks.
All right, thanks a whole lot. Thanks for waiting. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. What do we got up there, Chris?
If you buy stock worth $50 and sell it for $100, make $50, but reinvest it right away. Do you pay taxes on that $50?
You do. You do. I think where people remember, I know my mic is cracky. I know. Frank is saying, go to the other mic. Let's see. There used to be a time when, am I on this mic now? Okay. There used to be a time when if you reinvested your gain from the sale of a personal residence, that within a certain period of time, that gain would be tax-free. And I think people keep thinking about reinvesting gains from that. But no, when you sell your stock, once it's sold, then you have to pay the piper. The great thing is, though, you get so many special breaks on capital gains. It's unbelievable. Cap gains are really, really a deal.
Right. Oh, my gosh. If you're in the 22% bracket, you pay 15%. If you're in the 12% bracket, you pay 0. So, unbelievable.
I'll tell you, I had a lady made almost $100,000 in dividends, and she paid almost no taxes because that's the way the law is set up, And then somebody went, great show. I listen every week, but Esther's mic is cracky. It is cracky. It's cracky by Jinky.
Yes,
but I'm on the other one.
Call Entercom and complain.
And
you
say,
can call
gee,
Entercom and complain.
We want to hear Esther, and she sounds so old because she's so cracky. All right.
And she hasn't had enough caffeine. It's tax season.
That's right. Hey, Tom, how can we help you?
Hi, Esther?
Yeah.
Oh, hi. Okay, I'm totally confused here. I was told I don't have to pay income tax anymore.
Okay.
And I don't really know why. I can't. If you could help.
All right, so it's not like you don't have to pay income tax anymore. Believe me, Tom, if you had taxable income, they would love to have you pay taxes.
Right.
But when you apply, your standard deduction, let's say it's 12.4, if you're a single person and you're under the age of 65 and it's 12.4, so you made $8,000 in wages and there was no withholding, you're under the minimum filing requirement. There's no refund or balance due you're getting, so you don't have to file.
So what's your sources of income?
Okay, pension and Social Security.
How much pension?
$12,732.
Are you married?
I'm a widow.
Okay. And your Social Security is how much? About.
No, I got it right here in my hand. I can't. Why can't I move these papers?
Now, let me ask you something. Did you get the stimulus money?
Yes, I did.
Okay, so you're good there.
But that's just...
But let's just do simple math. Let's say you got a $20,000 Social Security.
No, it's 18,900.
Yeah.
All right. So half of that, which is around 9,000, is added to that first figure you gave me.
Well,
so now you're up to $21,732. That is less than $25,000. So none of your Social Security is taxable, and the balance and the $12,732. Are you over the age of 65?
Yes.
So you're going to get a larger standard deduction. So what you made is less than what the standard deduction is. And did they take any taxes out?
Out
of the wages?
No.
So you didn't pay anything. You got no refund, no balance due, and you're under the minimum filing requirement, so you don't have to file.
But it's like, what if some new stimulus check comes around or something?
Oh, well, the thing is but I thought you said you've been getting
Right,
stimulus.
but with the new one, if he doesn't file a 20, I know what you're saying. If you don't file a 2020, are you going to get the stimulus that may be getting passed?
You're right.
I think you will. And if not, I'm going to tell you that'll be just like this year. If you didn't get the stimulus when you do this year's return, you get to do that reconciliation credit. It'll be something on next year's return that lets you get the reconciliation credit again. But I know you just wouldn't want to miss it. But
yeah.
Do you own your home, Tom?
Yes.
Okay, check. I tell this to all my clients. Check with your town or your city and see if you have to file every year to keep your enhanced star, or can you still go in with your income statements and get the enhanced star? I hate to see you lose the enhanced star because you don't file a return.
But you still don't have a tax liability and don't have to file.
Right.
I mean,
Tom, we'd love to help you. We charge $25 if you just want to file that return.
Oh, $25 and just get it over with.
Right. You can sleep at night.
I can't sleep anyways, buddy. Right?
Well, you and me both. I'm up at 4. When are you up?
Yeah, I think I got a text at 3:30 this morning.
I was up around 3:30. That's true. I'm a crazy person.
I don't work, so I tend to keep strange hours.
Okay, Tom. Thanks for calling.
All right, thank you.
All right, bye-bye. All right, I'm Esther Gilius, a tax lady who has insomnia. 8030930, 8030930, 8030930. Star 930 on a cell phone. You can text us at 716-8030930. Okay, and we're going to go back to the phones. We got Megan. Hi, Meg.
Hi. I have a quick question. I heard someone talking about their 18-year-old child and getting the stimulus. We have a 17-year-old daughter. She works. She made $14,000, and we're above the limit for the stimulus, so we got a little bit. But for this year, for the 2020 return, would it be wise for as much as she made for us?
I think she should be on her own. Don't you agree, Chris?
Yeah.
Because that kid then would not pay any taxes or pay very little taxes, and she would get the stimulus money for the 612 and look at the 14 as well.
And then next year we revisit the situation.
Next year if next year she doesn't work, you as long as she's a full-time college student or under the age of 19, you can claim her again.
Yeah. Well, she's not a college student right now. She's in high school.
But next year she might be a college student, right?
She will be.
Yeah. So you can revisit that next year. Every year stands on its own.
Right. Okay. But when you say that She didn't get the 600 this
But she would, because there's a reconciliation credit on this year's return where if you didn't get the stimulus, they will give it to you.
Okay, great. All right, thank you for your help.
All right, thank you, dear. Okay, we're going to go back to the phones. We got Pat. Hi, Pat. How can we help you?
Hi, Esther. If someone worked for, say, a month for a place, and they said that they sent out the form that gives you the amount that you made.
The W-2.
Thank you. And you never got it, and you called them, and they said, well, we can't duplicate it. We can't send you another one. So she called the IRS, and she said, how do I get the tax ID number? Because her tax person said, if you get that and you have your paycheck stubs, that would be enough.
That's correct.
So she called and asked for the tax ID number, and they didn't respond to that either. How can you get it?
Well, you can do. It would be a paper. You'd have to send it paper. But you do. Do you have your pay stubs, Pat?
Yes, it's not mine. I'm calling for someone else.
All right. Well, do they have their pay stubs?
Yes.
So, you do substitute wage and tax statement. You basically blow them into the Internal Revenue on that form that says, ABC company won't provide me with my W-2. I've called, and this is my pay stub. And the IRS will do the research, but they will, unfortunately, because it'd be a paper return, they probably won't process it till the end of time because they're just slower than molasses in January right now.
Yeah, you can also, the person who you're calling for, could also call a coworker if she knows somebody else or he knows somebody else that works there and say, hey, on your W-2, what's the tax?
What's the EIN number?
Yep.
She doesn't know anybody else there. She only worked a month.
Is it a fairly well-known company?
Yes, it's a school.
It's a school.
Mm-hmm.
And they
won't reissue the W-2.
Is weird. What school city is it in?
Amherst.
I would call the Board of Education and be pretty bold about it. The Amherst has no excuse not to reissue a W-2.
Yeah.
It's simple. Everybody, you got the payroll records. You just make a copy of it.
It's actually Williamsville, I guess.
Yeah,
well, then she should call the Williamsville Board of Education.
She called the IRS. And
they're not going to help her right now.
Well, what they told her was, we'll send papers to you and we'll send papers to them.
Yeah, I know, but that all takes time.
But in the
and I'm going
meantime-
to tell you, the IRS is really, really, really slow and far behind. The easiest thing to do is to call the Williamsville Board of Education and say, I'm an employee and I want my W-2.
Okay.
Okay?
Thank you.
Thank you. I mean, that's what I think. What do you think, Chris?
Oh, definitely.
All right, let's quickly go to Cliff. Hi, Cliff.
Hi. I've got a question about a motorhome. Can I count a motorhome as a second home?
Yes, you can, as long as it has a potty, a bath, a kitchen, and a place to sleep.
Okay, so it could be used, and I can write the
interest off.
The interest off.
And don't forget to use the sales tax on it on part
if
of
you just bought it, right.
I'm sorry, what was it? The what tax?
The sales tax. If you just bought it, the sales tax as well.
Okay, yeah, I bought it in 2020.
Yeah, sales tax and the motorhome interest.
Okay, very good. Okay, well, that's very helpful. I appreciate it.
All right, thank you, Cliff.
All right.
Bye-bye. And we got Anna. Hi, Anna. How can we help you?
All right, I have a question. I was working for a company, and they never sent me my W-2 form for me to file taxes.
Uh-huh.
And I called and asked them for the tax ID, and I had no response from them.
Okay, so this
You
was
don't
very
work-
kind
you-
of...
you
don't
don't
work
work
in
for-
Williamsville, do you?
Pardon?
You're not from Williamsville, are you?
No.
It wasn't Williamsville Schools, right?
No, it was at Damon College.
Okay, just call and be forceful and say, let me talk to the provost. I want my W-2.
They did it, but we never received it.
Okay, well, then have them go down and pick it up.
And they said they can't do it again.
They can. This is silly. They
They
can.
get them electronically. They can print them up. They
My
can call
gosh.
their payroll company and say, we need this one W-2. They can get it. They just
can get
don't
it.
want to.
Right. They're being lazy.
Uh-huh.
Be forceful, my dear.
Yeah, we have been, and no answer at all.
Well, then go down in person and want you and of course the school might not be open yet.
No, it's probably not.
But you can use a final pay stub. It just is slow. If you don't have the EIN number, it's really slow to get it. And I would just go down and make a scene.
Need that number, duh.
You need the number.
Yeah.
Okay, Anna?
Okay.
Thank you, dear. Bye-bye. I'm Esther Golias, the tax lady from EG Tax. We have appointments back at the office a little after 4, so we forestall our 3/4 break. So we're going to be leaving a little early. If you want anything during the week, you can go to our website at egtax.com, ask the tax lady, call any of our offices. We're at egtax.com. We hope that you'll give us a try. We certainly want to help you. We hope you have a great week.
For those people with the EINs, try Googling it.
That's true. That's true. In other words, you can Google the EIN number of the Williamsville School District, and if you get that, then when you're doing your substitute wage and tax statement, it'll be much better. Okay, until next week, I'm Esther Golias, the tax lady. Have a great week.